Hello, 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 hello. Good afternoon, good evening, good morning, wherever you're watching from. Welcome to Stock Market Technical Analysis Daily for March 1st, 2021. Wow, 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 wow. Hopefully, you had a great week, trading week, and last week, and you parlay that into a good resting weekend. For me, what was I doing? I was actually creating content. I spent time researching the ever growing popular ARC Invest. So we made a video, we wrote an article, and we will be making another video today to trying to bring you how to use the so-called Cathy Wood intraday trade, because this is something, a trend that has really been picking up recently, where all of a sudden, and it happens to be on some very at least unknown stock to me. They are known stock to to other people. You just see a stock pop up, you were like, wow, where did that come from? Oh, Cathy Wood bought that stock. So we will be making we made a first introductory video, but I have it all set up right now. So hopefully later today, I will be recording a video on the describing all of the ETFs. The articles actually, we have the article already available on successful trading. All right, so that's that for later. Let's go right into March. We are at 9 a.m. Eastern time in New York and in Toronto. It is 6 a.m. Pacific time in Southern California. Glad to have you. Hello, Miss Marcy, my closest neighbor here in Southern California. Hello, Mr. Nick, one of my furthest neighbor across the Atlantic. Who else? Mr. Demi, how are you, sir? Glad to have you guys. Thank you, thank you, thank you, thank you. Definitely, the show is possible through the people who see value in it. So I've always said that, hey, if you guys were not here, I wouldn't be waking up. I will wake up to trade, but I mean, my preparation literally take me less than 30 minutes to know. I know already some of the stock that I'm going to be looking at. Speaking of stock that we'll be looking at, let's start with the one and only SPY. All right. So SPY went through some type of wahala on Friday. Literally wahala in the sense it wasn't just SPY. It was the whole thing. I mean, for the last day trading session. So they started the 26 small gap up, sell off, then bits of a rally midday, then more sell off, another rally, and then they decided, hey, you know what? Really, for the last 30 minutes or thereabout, we're just gonna make a mess out of the whole thing, because SPY went from 384, find itself touching 380 in a matter of 10 minutes. Yeah, I mean, this big candle on here that you can see, you could have easily made money on puts on there. And trust me, you know the drill. Yeah, you know the drill. That was a 10 bagger right there, just on that 15-minute candle. That's the type of market that we have been treated to in 2021. And it wasn't just in 2021. This has been happening for the longest of time, right? You spend enough time studying SPY, you will find yourself with money being thrown your way if you know what you are doing. If you know what you're doing. And knowing what you're doing, it's one of the things that we pride ourselves in teaching you what to expect in this type of situation. So that was Friday. What to expect today? So SPY closed at 380.32, and this morning, the stimulus, whatever else is going on with here in the US, we are printing 384.68, 364.88. That's a lot. That's 4 points, meaning this is that standard 4 point thereabouts, right? Because it used to be 3 points, but now SPY is trading closer to 400 than anything. So that's our new norm, if you will, to be seeing profit. So I think overnight, those 385, 384 calls, definitely the one in the money, they will be worth something here at the open. So the question was, okay, if you didn't take advantage of that strangle, how would you have taken advantage of that strangle? We have talked about another thing on here, right? We have talked about the beginning of each month. So let me actually do a little bit illustration here by going to the daily chart of SPY. I take time doing these things because the aim is again to provide knowledge that you can transform into making money out of this market. Yeah. So meaning on Friday, with the knowledge that, hey, the first day on Monday is going to be the first day of the month, that's definitely warrants taking a stronghold on SPY. So in that case, congratulations, because those calls, they will be paying. So here have been the last, we can only look at, let's say, the last first day of the last couple of months. So we are going back to February 1st. This was the candle here on this. So low of 370, high of 377. Though we started in the middle of it, 373, so with a gap. So for me, I see quite a similarity between today gap and February 1st gap. So what we'll be looking for here, most likely, a small dip before a rally. You can go using TradingView, replay the tape of February the 1st to give yourself an idea. January 21st was a big red candle overall. It was a slight gap from the last day of the year, December 31st. So from a close of 373, 374, let's say 375, well, I mean a gap of 1 point, and then they sold it off for 10 points. So that's quite something on here. How many points between the low and the high on here on February 1st? 7 points. 7 point, 10 points, my friend, on SPY. That's getting some contract at 10 cents, 15 cents, and seeing them go close to $1. That's the type of opportunity that exists beginning of the month on here. At the beginning of December, first day of December, it was just a straight up huge gap. Yeah, we closed at 362 the month of November. The first day of December was 367, 7 point thereabout. So right now, so far, folks, SPY is treating us to 4 points. The quant analysis here over the last three months, first day of the month, we have seen about 7 points. You do the math. Hence, no brainer for me. I already shared inside of the quant analysis trading, not quant analysis, the Gangster trading room. I'm going to be looking to set up a nice, a strong or Gangster trade on SPY. I get a feel, and I just be patient. I let SPY do its excuse me. Excuse me. I let SPY do his thing this morning. I'm sorry. I apologize for that. So that's what we are looking for. What's your chart analysis on SLV? Oh my goodness. Okay. Good morning, Mr. Bond. Good morning, Mr. Zobon. How are you? Hopefully you had a great weekend. I don't know why I'm laughing at that. So, all right. So, well, that's SPY, right? So we're focusing on SPY today because if you are new here, SPY has expiration on Mondays, Wednesdays, and Fridays. So cheap options and with huge potential on returns. The other ETFs, where are they, very quickly before we jump into the stock that our traders want us to take a look at? So QQQ. Again, we look at the starting point, right? We are all indexes have been closing all of last week, literally dropped below both moving average 8 and 20, meaning that bearish territory. And the stock market really treated like bearish territory. If you look at it, maybe except maybe, let's say, Tuesday and Wednesday, but but even Tuesday, because look at that long lower shadow on there. So they definitely, Thursday was definitely bearish, and Friday was, let's say, bearish for the most part after the initial gap. So opportunity to make money. So this morning we are gapping a little bit, but we are nowhere out of the woods. So here in this scenario, what do? You consider that, hey, unless these stocks, this ETF, they go above the natural resistance, which will be the yellow line you're looking at here, that's always the closest one. The exponential moving average 8 period, if you have a simple moving average, that's the same thing. Whatever the closest natural resistance is, until the stock is trading above that, you do not consider that we have gone into bullish territory. If anything, at that point, so meaning that here for QQQ, if QQQ hits 321, let's say 322 today, you are ready to take a trade, and that trade will be bullish if it's able to close above it, or that trade would be bearish if actually it got rejected at that level. But at least it gives you that point of where you will be waiting for QQQ. That's how you go about trading this. How about IWM? Expiration on QQQ that all the way to Friday. So IWM played a little bit. It wasn't as big candle or anything, but it's also below the both moving averages, right? So resistance for it are here. The closest resistance actually here, the EMA 20, standing at 220.71. But guess what? We are opening above both those moving average. And here I notice on IWM, we didn't have the crossover of the EMA 8 below the EMA 20, which is usually a confirmation, at least in that direction, of a bearish direction, right? We have not had that yet. Let me say that. We didn't have that last week. We had not had that yet, but it's approaching. So, but this morning, the price is starting above that. So that's an interesting setup on there to say, hey, will IWM be able to reverse on here? Because actually it's up over almost 2% this morning in pre-market as I was looking at it earlier. So the ETFs definitely worth keeping an eye on. All right, so let's take care of that. And then let's go and take a look at, let me write the stock that Zorbon wants us to take a look at here. SLV. I'm not sure. Let me not say that. All the wahala about SLV. I mean, folks, how could somebody tell me actually how much money they have made out of SLV recently, of all of these? Oh, it's a short squeeze or whatever. So let me take a look at SLV. And I'm saying that because I actually took a trade on SLV on Friday. But for me, it's like one of those slow mover. I automated a trade and I got an entry at a cheap entry on calls. Very, very far away. You know how I roll on this. So SLV, the iShares Silver Trust, this is the chart of this stock, right? Other than let's say February 1st on here where there was this huge gap, the rest of the time, I mean, look at the size of this candle, my friend. So SLV had a run that really was something from 23 to 27. But notice, folks, yeah, we're talking $4. Granted, you're going to tell me, yeah, it's only $20-something stock. These are the ones that are rather miss. I kid you not. Because for me, if I'm taking a trade on something like this, yeah, I'm expecting this thing to break out of this range. But even here, we have studied SLV before. Why? Look at this box on here, yeah? So this type of stock are trying to avoid them as much as possible. So, but in any case, if you are on SLV, I'm not saying that the SLV doesn't gonna make money. Actually, I need to start picking my opinion now on things, because when I give my opinion on something, that stock usually start proving me wrong, and I love being wrong and making money. Hello, BA. If anybody from my Discord would remember BA last Monday, right? I was sitting on this very chair and I was reading the message from our friend, Mr. Doug, asking, are we not going to trade BA? And I said, oh, BA, I'm going to take a wait and see approach. Oh boy, that wait and see approach created a 20 bagger later on, because BA was one of our trade alert for that week. Yeah, I mean, I respect the computer. Trust me, we have been burned. Then we have had instances here, at least two that I can remember, BA last week and Walmart on one instance where we just said, oh, Walmart is going sad way. There's nothing that's, hasn't shown us anything on there. And then in midweek or whatever, the stock just took off. I was laughing again. I love being wrong. So please, SLV, yeah? Let me talk smart here about SLV this morning. I want to make money. I have the trade. You can ask Mr. Ryan. I took the trade. So I mean, if I'm taking the trade, it's not a 30 cents that I'm going to get excited on here. It's in bearish territory, to be honest with you. So meaning this is a case of buying the dip, right? So let's hope that this buying the dip doesn't go wrong on here. Okay, I've said enough. That should guarantee for all of us, that should guarantee at least 27 by Wednesday on SLV here. I'm talking smart about SLV. It's called reverse psychology, folks. All right, Geo Group. This is the next stock that Zorbon wants us to take a look at. Geo Group is a $7 stock. Oh my goodness. Okay, Zorbon, we need to talk. You know how I feel about $7 stocks, right? Okay, so this again, folks. Look at the range. From November to now, we have been in a very tight range, $9.50, $7.20. are you buying the stock right out, or are you trading option? For me, I trade option, right? So buying the stock on here will be actually could be a good deal to say, hey, the stock is at its lowest, whatever, you're buying the dip and then you just buy it and hold. Yeah, that's not what I do. My main thing that I do is to invest a tiny bit of money in option to get huge return. Yeah. So when I'm analyzing the chart, really you get my point, right? So this is almost a 52-week low right now on JO. So this type of stock, I mean, even buying puts on here is like, okay, how low can this thing go? So we are looking at the weekly chart. This is a 52-week low. Yeah, the last time this stock was at this lowest level, oh my goodness, you have to go back as far back as, are you kidding me? February 2009. Where was I in February 2009? I didn't even know what an option was. I was trading stock, but I wasn't trading option in 2009. So this is a 52-week low here, my friend. Yeah, the trend is bearish. Let me tell you that. Why? Because we are trading below the moving average, and we have been doing that for a longest time. So not sure what your timeline is here on JO, but that's what's at least from a technical analysis that's giving us. SOXS, easier to say. Direction share trade. So this is an ETF. Daily semiconductor bear 3 times. Oh my goodness. Oh my goodness. All right, so let's see. It's just a stock as any other. This is the weekly chart. So let's go to the daily. The weekly chart is, it doesn't tell me clearly what's going on here. So let's go to the daily charts for this ETF. All right. Okay, well, the trend speaks for itself. It's trying to recover above the EMA 20. The EMA 20 is our green line. Yeah, the EMA 8 is our yellow line. So above that here, that's EMA 20 is at $12.38 thereabout. So it's gapping slightly here in pre-market. Obviously, a gap of, because it's an $11 stock, right? So a 40, 50 cents, that's a big deal. That's 4% thereabout. But the trend here, we have been in bearish territory for a long time, since November or over this month. So in order for the stock to be bullish, it definitely needs to confirm and start trading above this green line that has been like that trend line there that you can see. So overall, we will say bullish above that EMA green line. It's at 12. So let's say 1250. So this stock starts trading 1250 and more, then we can be thinking about the bullish reversal. Otherwise, we'll be rejected there, and it will start testing going back to $10. Hopefully, it's all one. That gives you an idea about your stocks on there. Okay, anybody else has stocks? So pretty much the main takeaway today is watch for SLV to spike up, because Telex spoke ill of it. Yeah. So let's see. Let's go here inside of our FinViz to take a look at some of the movers and shakers to start the week. Doesn't it seem like, how many times have we said it? Riot blockchain is one of those stocks that you just strangle and then you wait for the best possible outcome. I have not been monitoring it. I think I traded it once, maybe a couple of weeks ago, but I haven't been monitoring when Riot jump like 10% that we consistently see it in either direction. How much are those options paying? I'm not sure. I'm not sure, because for me it's always risk versus reward, because we know that this thing follow what's going on with the cryptocurrency, right? So which are always moving. So every single day we have seen it here on top of our screener on FinViz. So this morning is starting in positive territory. And actually, I mean, the previous high was almost 2 weeks ago, was about $80. So currently trading at just below $50. That's actually could be, but how do we know that they have reached support there? That retracement is there. So Riot, it is one of those that's moving this morning. Mara, another one on here in the volatility watch list, if you will. It's always in there. There's this stock, Vuzi. Vuzi stock, I can tell you that based on my research on that I'm doing on ARK, right? On ARK ETF, Vuzi is a buy on there. Vuzi is a stock that I used to know a long time ago. It was like $7. Yeah, a long time ago means 2016, 2017, folks. It was like $7. Now Vuzi is trading at $20 or so, but I know for a buy from in Cathy Wood ARC ETF is a buy. When I make the video tonight, I'm going to illustrate that. So I'm not sure then what's this option look like. So let me tap VUSI here on another screen inside of my Power A Trade. Oh yeah, VUSI only has monthly option. Monthly options, the thing is that sometimes they can get expensive. Yeah, so monthly options, they are nice when the implied volatility is really controlled. But in a stock like this, I mean, the implied volatility on VUSI for March, the third week of March, that will be March the 19th expiration, I believe. The implied volatility is 170% thereabout. That's a little bit too much. Yeah, actually, why am I doing this and I'm not showing you that screen? Let me go switch the screen here and then just jump into Power E-Trade so that you guys can see which that we are referring to. All right, so here's VUSI. VUSI stock is up 7.49%. So congratulations to those who took the trade. But here's the thing. The good news is that you have 3 weeks, almost 3 weeks, right, before expiration. So no stress, no wahala. Just a matter of being patient. But the options are expensive because if, let's say, you want the 25 calls, for instance, why I'm picking 25, hey, I don't know. If a stock is able to go up $7, that's about $1.50 in a day. That gives you conservatively the idea. So those were worth $1 and that spread. $1.05, $1.25 on Friday. So here, using that technique that we have mentioned on here before. So you take the delta and then you multiply it by the number of points. So 33 cents is the delta for the 25. So that will give, this thing could be an additional 50 cents on those contracts. So between 150 and 175, the cost of the 25 call. That's a lot. If I'm trading monthly, I remember like one of the best stock I used to trade monthly calls on or options on in general will be was it G? Yeah. So I will be stealing contract for 20 cents. Then I know I have 3 weeks that thing can go to $1. That's, to me, is a definition of great trade. When I'm starting at 1 point something, because my initial risk is always a case of what's my initial risk. But VUSI, please look it up. At least that's a takeaway. And I'm going to be sharing again in the video tonight on the buy and sell from Cathy Wood ARC ETFs, which we analyzed over the weekend, and we created an article on successful trading. You can catch that article there. It's I think it's a very nice research on there. I have chart that I generated. I have infographics and things like that. I think, and then we have the video from the introduction to ARC, right? So that's we made. Was it Thursday? All right. So one for the road on here. I want to bring something here. I want to bring this stock on here. Coca-Cola. So we went to one extreme to the other. That's my transition to it. I just showed you a stock with relatively high implied volatility. We know that. I mean, if we want to speak stock with even higher implied volatility, because those are the ones that's making noise in social media, and here's one, right? Riot blockchain we talked about. So here's your implied volatility on Riot blockchain. So this morning, if you bought something, let's say let's say maybe even the 50 calls. In order to buy the 50 calls on Friday, you needed to bring in $6, $7 per contract. That's $700, folks. Yeah. So something within us, if the stock was trading at $43, even if you went at 100, folks, 100. Yeah. Let me show it here on my tiny screen. You needed $1.15, $1.06. And this morning, delta is just 12. So meaning, okay, 4.48. So you risk 400, you risk $1. And this morning, you are rewarded, after the stock is up 11%, you will be rewarded with about 50 cents. No, at least minimum, because that's just an estimation. So this contract, they could be worth between 160 and maybe 190. So, but that's the risk, my friend, right? So on the other extreme of that, what if I offer you a stock like Coca-Cola? You're going to think, what is this guy talking about? Okay, so look at the implied volatility, 20%. So let's pick an example here. The stock is trading at $49.46. Yeah, it closed at almost $49 on Friday. So now, if you want to take, let's say, for me on here, I feel very confident with a delta of 20 for 20 cents. Yeah, write them down. Maybe I need to do more research on that. A delta of 20, meaning we have a 20% probability of being in the money at expiration for 20 cents. I like that. Implied volatility 22%. So yeah, this is where for me, these are the type of stock. Oh, actually, my bad. This is 3 weeks expiration, folks. I was like, I saw a better price in pre-market because I actually did study this in pre-market, folks. Yeah, I was like, come on, Telex, what's happened here? No, look at this implied volatility, folks. The stock is trading at $49 as of Friday, and to get the 50 call, $1 away, it costs you only 19 cents. Yes, folks, I like this a lot. So yes, I'm gonna be looking for 50 calls for Coca-Cola. If I can steal them for 20 cents and below, right on. That's enough type of risk. Why? Because, okay, how many contracts can I take on here? I can start by just scaling in, right? So I take some, so my buy zone could be anywhere from 15 cents all the way to 20 that cent, in that range. Because here, yeah, the stock is gapping 1%, but with Delta, theta decay over the last couple of days, the weekend, I can get this thing for 20 cents. So that's my order. I'm going to put an order in because I like the risk versus the potential reward. Because when you get into option that's with this low, small implied volatility, if the stock start moving, then you are really in nice business. Okay, folks, hopefully you learned something out of this today. It is currently 9:24 Eastern Time in New York and in Montreal. Thank you for participating in this stock market technical analysis daily. We hope to see you same time, same place tomorrow. Until then, no wahala, my friends. Bye-bye.